Hello and welcome to the Money Show. I'm Kavita Thapliyal and let's talk about expectation on your personal tax front. Now, salary class has very high expectation as far as budget is concerned, also because not much was given to them in the interim budget. But then when we talk about boosting tax saving options or having more spending in their hand, a lot of potential changes are said to be happening in the new tax regime. Let's decode more on this. I have with me Tarun Garg, Director, Deloitte India. Tarun, good evening and welcome to the show. So clearly, the interim budget was almost like a non-event for the taxpayer. Now, considering that the attention is all on the new tax regime, let's understand the onboarding and the kind of preference taxpayers are, having over these two tax regimes. So, what's the data so far on the new tax regime? What kind of salaried class are now in tune with the new tax regime, are preferring that?
Thank you, Kavita. So this is a really important question, and I'll like to tell the audience that see initially the new tax regime when it was introduced in 2020-21, it was not that popular. The reason for that was all we know because you have to lose on all your exemptions, benefits in order to avail a lower slab rate. But then it was not that much popularized, and probably due to lack of awareness also we may call that was not opted, and that's why the government had to take some steps the way they had kind of rationalized it further, moving from a 6 slab structure to 5 slab structure, and then even say they had kind of given an exemption of income up to 7 lakh, which means a 25,000 sort of a tax exemption if you have an income up to 7 lakhs under 87A. So that were some of the measures that they took. And in fact, they even added a standard deduction to the new tax regime, which was only available in the old tax regime earlier. So when we see the data sources, at least for the financial year 22-23, sources say that like at least 60% of the taxpayers have started kind of moving towards the new tax regime. The primary reason, of course, is it like it has become some bit of an attractive move, and then it also is hassle free in the sense you're not required to maintain any data or documents and all. You just have to kind of close in your income and then avail that benefit. So that has been the primary sort of the reason, Kavita, for moving towards the new tax regime.
Sure. So, Tarun, let's quickly talk about the changes that were, or additions rather, that were introduced, for the new tax regime in the interim budget, and nothing much was actually, given to the old tax regime taxpayers. So, what was given for the new tax regime in the interim budget? A quick recap, or almost, in the Modi regime so far, what all has a taxpayer really gotten?
No, so see, in the interim budget, what they did was that, see, they had introduced a standard deduction. So if we see that in 23-24 itself, that standard deduction was introduced. But then in the interim budget, one thing that they did was that 7 lakh clause was kind of added, in the sense that any person having income up to 7 lakh, so that was basically kind of exempted. uh, again under 87A. But when we compare it to the old tax regime, it is only say 5 lakh of an income. So which means 12,500 of a sort of a relief under 87A. So broadly, these were some of the provisions that were introduced. Now, one thing that we see is that certain other benefits, allowances which are there under the new tax regime are in the nature of, say, employers' contribution to your sort of NPS. So that is their employers' contribution to your schemes like Agniveer schemes and all. So that is kind of also there under the new tax regime, which is of course because first these incomes are added to the individual's kitty, and then these are given as a deduction under Section 80. So broadly, this is the regime that they've kind of formed up, Kavita.
All right. Now let's talk about NPS, because this is a very important retirement scheme that even the government is very bullish on. Now, new pension system has had its own benefit in the old tax regime. 80C and 80CCD. Overall you get a 2 lakhs benefit. If it is not introduced in the new tax regime, the employer benefits, barring the employee benefits, if the taxpayers' benefits are not included, won't it be like a dampener in terms of going ahead with NPS and making it going more aggressive on it, the sentiments would actually ruin, in terms of getting it as an investment instrument in your portfolio for retirement.
No, so absolutely, and it is a important social security schemes also, because not many
Ha.
people opt as their provident fund, because what we see in many of the companies also, like millennials, Gen Zs, they do not opt for provident fund. They look for some more attractive schemes like NPS, because there you have more flexibility around where do you want to invest your portfolio, and you can even withdraw because the withdrawal rules are also kind of changed. So definitely, NPS is an important scheme. Now, what we see is that, say, under the old tax regime, that benefit is still there in the sense that you get 1.5 lakh as a deduction for contribution within that ATC. And then if employee is contributing over and above that, so it is come under ATCCD 1B. So which is again 50,000. So which means overall 2 lakh kind of a deduction is available for people opting for NPS and making contributions there. But when we compare to the new tax regime, as such, there is no sort of a benefit, and even the employees' contribution or additional contribution is not sort of getting recognized. So you are absolutely bang on, Kavita. So there, one way to look at is at least for an employee's contribution of additional 50,000, they may kind of introduce in the new tax regime. And of course, the employer's contribution is always kind of available as 10% of salary under both the new tax regime and the old tax regime. But for the central government and state government employees, that contribution limit is 14%. So broadly, yes, that may be kind of introduced to boost up the sentiments and all.
Also, Tarun, the kind of benefits we are getting on insurance, the kind of insurance for all initiative that is going on till 2047. It is still there in the old tax regime, but the limit of that is also should be raised. I mean, that's the demand. It's been there since forever. But it not being in the new tax regime again will be a sentiment dampener, because we are looking at insurance for all and a very important coverage that we are talking about in terms of health and life insurance. In terms of penetration, it's not only the government, even the stakeholders are working towards it. Agreed that in the new tax regime you have more disposable income. There's less of documentation, in terms of those last minute hassles and headaches are gone from you. But then talking about the broader intention of this from the sector's point of view also, and insurance being an integral part of your coverage, your financial stability and your financial plan, shouldn't that also be introduced in the new tax regime?
Kavita, well, you have raised a very important point. So, what at least I will divide this question into two parts. So now, what the finance minister has said when she introduced the new tax regime into the arena into 2020-21 budget, there she called was that we should look away from investment. So investment is your one destination, and investment should not be the main motto behind kind of claiming a tax benefit. So with that sort of a budget speech, she had kind of announced and introduced the new tax regime. So in that line, at least for say life coverage or say some of the other insurances, I don't feel that the government may be kind of introducing it into the new tax regime. That is one. But at least say for medical expenses, definitely I'm totally aligned with you in the sense that at least ATD is one benefit. There the government should think of introducing it into the new tax regime. The sole reason behind this is it is not sort of just an investment. These are like your mandatory expenses. What we have seen in the COVID times also. A lot of people suffered because either they did not have a appropriate coverage in their hands, or whatever coverage they had, that was very less, or even cases of no coverage. So broadly, if they introduce ATD benefit at least into the new tax regime, one, it will give some sort of a booster to the middle class and to other salaried people, that they can invest and can claim certain tax benefits. Second, as you rightly pointed out, insurance for all, the government will move towards that sort of an agenda. So I'm sort of aligned with what, Kavita, you're saying.
Sure. Although less chances of anything being announced for the old tax regime taxpayers, but we should definitely cover their concerns and demands as well. So, what's on the card according to you?
So for all old tax regime payers, I know, see, many of the people, like 40% is again a substantial number
Yeah.
that people kind of look for the old tax regime. What we have seen is that at least ATC benefit limit should be kind of enhanced from 1.5 lakh to at least 2 or 2.5 lakh. That is in demand for kind of so long. In a couple of earlier our editions also we had raised this. Then we see even HRA benefit. Like what we have seen is that only 4 cities have been announced as metros, which means people living in those cities can claim a benefit of 50% of their salary for the HRA exemption purposes. But what about people of, say, a lot of people stay in Gurgaon, Noida, then Pune, then Bangalore. They ended up kind of only getting a benefit of 40% of their salary for HRA exemption purposes. So that is one area which has been kind of discussed at the pre-budget discussion levels also, that they should kind of notify that. So again, that benefit will be kind of available in the old tax regime. Then there are certain other benefits in the sense of enhancement of standard deduction limit from say 50% to at least 75 or 1 lakh, because what we see is in the housing sector the 30% straight benefit is being given when we calculate the income under the house property. So even the salaried class, they have to spend a lot more to kind of claim that benefit. So at least that limit should be enhanced for the old tax regime payers. Yeah.
All right, let's move ahead and let's also talk about home loans. And I would also like to cover the women investors aspect, that all that already exists in the old tax regime, which is not there again in the new tax regime. And that will again ruin the sentiments, because in one way, we really want our women to be, at least have that sense of financial freedom as far as managing their finances is concerned. So how can the government go about this? Do you think this will be on radar, or is it their concern right now? I mean, definitely is their concern, because we've seen few schemes, especially for women, launching. But apart from that, will it be given thrust in the budget?
So that definitely will be seen, because I think in the last budget also the finance minister has given some thrust on women investors. They had pronounced some mudra schemes also, easy loans for women entrepreneurs. So definitely that will be on the radar in this budget. But what I kind of, it'll be a little bit of a surprise element to see that if the government is kind of enhancing that Sukanya Samriddhi limits or Mahila Vikas Patra limits and all those schemes. Because see, this limit has been there, and if they enhance it, it will certainly give a boost and benefits to those women investors and all. But it'll be an area that needs to be seen once the budget is announced. But yes, lots of representations have been made around this point to enhance that limit and to give certain reliefs, because the overall within that scheme of things, it gets addressed or kind of accounted for within that 1.5 lakh limit under ATC. So it should be kind of increased, say by at least 50,000 or so. Yeah.
Right. The Association of Mutual Fund, Tarun, has also given a proposal where they want to rationalize the tax benefit on debt mutual funds, which is now at par to fixed deposit. Looking at the markets, both equity and debt, do you think there'll be a thought or concern or anything on these lines announced for the benefit of this way of investment?
So it will not be all greens in the budget. So, so yes, this is one area. It may not find the light of the day, because see, Section 50 AA was introduced in the last budget only by Finance Act 2023. So whereby the debt mutual fund was brought in line with some fixed deposits, which means that any gain on debt mutual fund will be considered as short-term capital gain and will be taxed at your slab rates. So if the question is that, like, will that be changed? Yes, the representations have been made, discussed with the finance minister, but I'm kind of skeptical that will be addressed at least in this budget, because one thing we need not also forget is that the government has been recently formed in say June, early June, and they did not get enough time to do all those consultations, discussions, and go in for this budget. So they will touch upon those areas, like I said, maybe some rationalization in tax rates and all, increase in enhancement in the slab rates and all. But broadly changing these or tinkering with the capital gain regime, it'll be a little difficult this time at least. Yeah.
All right, one last question to you, because it's very important to talk about market sentiments, which are completely on a high these days. So according to you, the announcements that would really take these sentiments up or dampen the mood of the market?
So yeah, so see, one area where I find is that NPS is one area, because see, not that it is just a social security tool, because what we see is that more funds, if are invested into NPS, they in turn gets kind of diverted towards market, because these are also invested into equities, debentures, bonds, and all. So there, if that limit from 10% is hiked to 14% for say people who are kind of employed with the private employers, there I see some bit of high that may bring up in the markets and all. Or even for certain sort of securities, if they brought it in line with the holding period for equities of say 12 months or more, that will also give some booster to kind of the market. But broadly, a dampener, if you call out, is that one we just talked about of the debt mutual funds, and even then there has been some demand from the fund of funds, that is the equity funds of funds who invest sort of in turn into the equities. But then the limit says is that you have to invest 90% or more of the portfolio to such equities in order to claim that benefit of 112A section. But then when we look at this limit in standalone for those equities, it is say 65% to 35%. So broadly, the government, while the representations have been made, but I don't think so that will be addressed given the time frame that the government got after the formation of the new government. Yeah, so that may act as some dampener to the market sentiments, Kavita.
All right, I think that will be all. And yes, definitely, let's see what will be announced. And then again, we'll connect with you on that very day, on the budget day, and analyze on what has been announced and what was missed, if at all that is the case. Thank you so much, Tarun, for being on the show and helping our viewers with this today. Thanks.
Thank you so much, Kavita. Thanks.
If you like this video, then like, share and subscribe to ET Now.